And it's time for markets now, and Dr. Scott Brown is our analyst this week. He's the Director of Strategic Partnerships for the University of Missouri's College of Agriculture, Food, and Natural Resources. He joined me on Wednesday to help us break down what's happening in the markets, beginning with any surprises in the latest WASDE report.
So I guess for me, the biggest surprise or biggest change that I saw out of WASDE in June was that they did increase livestock production generally, more cattle, more hogs. And I think, that's important because it sets the stage about maybe larger supplies in the second half of 2020, which could create some price pressure, especially relative to where WASDE was the previous month. So growth in meat supplies is something that we're going to have to continue to pay attention to as we finish this year.
And Scott, haven't had you on since we really started paying attention to COVID. I was looking at our show archives, second week of March, and I think for me, that's kind of when it clicked that the world kind of started paying attention to COVID, and it seems like we've been through so much since then. So I've been asking a lot of our analysts over the last several weeks when they come on, through your lens, how has the ag industry been affected the most?
Well, I think when you look at the ag industries, I always say the ones so meat processing is one that jumps out to me. So really more of a problem for those areas that have direct pathways to consumers, and maybe direct pathways to food service is the right way to say that. As restaurants were shut down as a result of COVID-19, that created bottlenecks that we've just never seen before. I sometimes say, when you think about at 1 week we had 30-cent pork bellies, that meant we were rendering some of those products to just a few weeks later we were triple the value of pork bellies. It's amazing the kind of changes that we've seen as a result of COVID-19. You can go a little further and say the corn industry hurt as well, right? With us driving fewer miles as we were in that stay-at-home mode, it hurt the ethanol industry. We shut ethanol down. So it's been those industries that I think had more direct consumer impacts that we've seen, the largest negatives. And frankly, now we're seeing some of the other side. I look at dairy markets and I go, cheese prices in the 250th range when they were $1 a pound just a few weeks prior, just tells you just how volatile these markets have been.
And you were talking about meat processing, and particularly with pork and those slaughter bottlenecks that were impacting the industry. I've been reading where there's still a lot of uncertainty regarding when producers might see some profits there. Any advice for the folks watching who are pork producers?
Yeah, so it's a really good question, Troy. I say when you look at pork markets in particular, a couple of things here. Number one, it's nice to see maybe weights finally coming a little better under control. So maybe we're getting a little more current. I don't mean that saying that we're over the backlog of hogs. I think we have a lot of hogs still coming to market here between the now and the end of the year. So I worry about the supply side of pork markets. I might suggest even larger pork production in the second half of 2020 than where USDA is at right now. For me, the bigger issue is how much drag do we get out of the general economy at this point? We've seen some of the job numbers. Some of that's positive some days, other days maybe not quite so positive. But when consumers have less money in their pocket, how does that affect things like pork markets? So I worry about the remainder of this year. I say all the time is we get some positives, and what could be the positives to me is as food service maybe continues to come back to life, we could see some demand pull. If we get enough demand pull and we get some higher prices, we ought to take advantage of that as pork producers. I guess as I get into early 2021, maybe some of the baby pigs that we might have euthanized, sows that we may have aborted, if we get a hole in terms of supplies, we could see that run up happen in prices fairly quickly. So I'm still reasonably optimistic as we get into 2021. We'll see some better things on the pork side.
And you mentioned that drag in the economy, and not just the overall economy, but the ag economy. From an educational perspective, what are some things that educational institutions like yours over at the University of Missouri, like mine over at University of Nebraska, what can we do to train future ag leaders to adjust to this new world that we're living in?
Yeah, so it's a really good question, Troy. I think number one, it requires a broad uh, look at the industry. I think we've often been very narrow in our own fields, and we're learning that this is all connected. When you think about, again, I said go meat processing. There's a lot of specialties from the time we talk about producing cattle until we ultimately get it on the plate, from ag economist to animal scientist to, you name it. And sometimes we get so much in our own little world, I think, that we weren't prepared for some of the questions that were going to come our way related to COVID-19. So I think the breadth of knowledge, understanding production agriculture all the way through to the consumer is important. And we're going to learn more about how to have more flexibility. And I think that's something that some of our future leaders need to understand of how do you create more flexibility or better flexibility in this just-in-time system that we have in place in agriculture today.
And finally, Scott, any marketing or risk management tips that you would like to leave us with today that we haven't talked about?
Yeah, so I go take advantage of price run-ups. There's downside risk in many of these markets today. I'll pick on dairy here for a minute and come back and say there might be some opportunities to lock in some reasonable prices. Why would I not take advantage of that today, just given that I don't feel so comfortable about the future of any of these industries? May not have the same opportunities right now in especially hogs, but even maybe cattle. But if we were to get a boost in prices as food service continues to open up, I just encourage producers, now's the time not to have a lot of risk out there if you can help it. So letting someone else have some of that downside risk might be something to be paying close attention to, as we're not done. And a second wave of COVID-19 could certainly put us back in a much more dire situation as you look at many of our ag industries.